out of my 5 picks, 3 of my picks are a repeat of what I said in '06. As opposed to Vincent, we are not a few quarter type investor, we are multiple years investor. The last time I mentioned Padini has gone up pretty substantially. It is still very strong on our buying list. Local consumption growth is still strong, and we like it because the balance sheet is also very strong. They used to rely a lot on Vinci, but now the Padini concepts have overtaken Vinci's contribution. So instead of a one-trick pony, they somehow to have found another. It's given them a better source of growth in the coming years. The second stock would be PIE. It was also in the December '06 list. I think the price since then has gone up 80–90%. We still like this stock. Same reason, balance sheet wise, very strong. They actually part of the bigger Foxconn Hong Hai group. It's quite similar sort of business, and prospects, I think, still attractive to us. The third counter, which was also in the '06 list, is Tonghe. It went up quite substantially after that, and then came down. So it's come down to our buying range again. And also another Taiwanese company, balance sheet extremely strong. These 3 companies, Padini, PIE, Tonghe, are full of cash. And in the case of PIE and Tonghe, they are expanding their capacities, and you will see the expansion benefit coming in over the next 1 or 2 years. Valuation for us, for these 3 companies, attractive enough for us to put it in the list. The fourth counter is a counter that we have liked for a long time, is Paksen. It's gone up a lot, it's come down a lot, and it's dropped back to a price that we think the valuation is very attractive again. As opposed to Padini, for example, the exposure for Paksen is basically China. And this is where, I mean, to come back to your earlier theme about Malaysian economy, you have the possibly one of the purest retail play on any of the stock markets, with exposure to Asian consumer spending. And yet Paksen, the one that's listed on Bursa Malaysia, is trading at a hefty discount to the Paksen trading in Hong Kong. Paksen Hong Kong has got only Paksen China. The Paksen in Malaysia has got exposure to Vietnam. And within less than 2 years, Paksen has got about 4 or 5 outlets there, profitable. And Vietnam's population is about 80 million people. And yet, Paksen Malaysia is trading at a discount to Paksen Hong Kong. We find this type of discrepancy, this type of divergences pretty attractive. The last counter, it's a bit out of my character. It's huge. It's TM International. We normally are a bit weary of this type of transformation and all that, but I think if you look at the, like what Raymond said earlier, the easy part is over. The financial engineering part has been achieved. Now they've gone to the operational side of it, and you see the domestic side and the international side. I think if you look at mobile phone companies generally, the valuation of TMI seems to be on the low side. That probably is a reflection of investors' concern that management execution, management capability is not up to where it is. But
how big is that valuation gap? How much compared in TMI compared to peer comparison?
Quite a fair bit. You can't really compare because Singtel is basically Singapore and Australia. Bharti Airtel is basically India. You see, TMI has got a very unusual collection of portfolios. It's got Bangladesh, it's got Sri Lanka, it's got Singapore, it's got Indonesia, it's got Pakistan, and these are all the emerging economies that we hope the government and the management of TMI would stay focused and not do anything silly, aim at the long term, and then you have a regional cell phone company that's pretty undervalued.
So your fund has bought 5% of TMI.
Wow.
No. That is CS.
Because usually your fund takes a big positions, concentrated positions.
He only has a pure Malaysian pick, only one pure Malaysian pick in that.
Yeah.
Signs of the market.
Yeah.
In Padini, is it the Padini store with the Padini brands that has come up very well?
Yeah.
In relation to Vinci,
Vinci,
did you say it has overtaken Vinci?
Yep.
I didn't realize that, because when I pass by the stores, I still see most of the women shoppers are still at the Vinci.
Buy 5 pairs at one time.
So the Padini stores have overtaken Vinci in revenue.
Yeah, contribution.
This will be
Earnings
selling
contribution.
mostly men's attire.
It's three, like Padini, Padini Concepts, and one more I can't
Seed, I
remember.
think.
Yeah, no, Seed is separate. Seed is separate. Under the Padini
PDI.
itself, the three
There's
sub
authentic
brands.
something, yeah.
Padini
Okay.
Authentic. That's right. Yeah. Seed is still quite a
Sub-brand.
distance. Quite a distance.
How are they performing in terms of exports? At one time, the export growth was very strong. Then
That has faltered. The growth has faltered. They are trying to look at new destinations. They have got 10 in Saudi Arabia, and they seem to have hit a bit of a saturation there. So they're looking at other countries. But the domestic growth has been far stronger than what, if you look at retail spending in Malaysia, you wouldn't imagine that Padini would have this type of growth.
you said the valuation is attractive for Padini as well as Pai and Tonghe. What valuation are you referring to? 7 to 8 times PE?
We're not, yeah, that's PE is one thing, but we don't focus just purely on PE. I think our view is much longer, in the sense that many of these companies have proven themselves for 10, 20, 30 years. And if you look far enough, the key issue is what is the probability of them being able to repeat what they have done in the past. And I think the companies are very focused, and they have a lot of cash. They could have bought palm oil plantation, and hack up their earnings for the next 1 year, but they have not done that. So I think if you look at it, if you strip away the cash that they have and so on, the valuation of the current businesses attractive enough for us.
So Padini, they are now more domestic oriented, but obviously you would foresee that there are a lot more places where they can open their stores.
Oh yeah,
domestically.
yeah. Globally, I mean, Malaysia is what, 25 million people. Globally, you have about another 6.5 billion people to sell to.
But now their focus is still mainly in Malaysia, right?
No, they have always had a strategy of being focused export and domestic. It's just that on the export side, the growth has been not as high as what was expected, and the domestic growth has been higher than what was expected. So that is why you see the earnings growth still coming in very strongly.
Are there still a lot of store openings in Padini
Yeah. And they're trying
domestically?
It's not just opening stores, they're trying different brands. It's also a branding strategy.
Actually, I thought that since they have their Vinci doing so well, I thought they might have tried to replicate it in China. But
China is a different market altogether. Well, the shoes of Padini are still made in Malaysia, and the shoes in China the competitors, the number of players, is incredible. The number of I'm glad that they are not selling shoes in China.
Oh, well, to get a real stock of a lifetime, it's good for the owner to be very ambitious.
I mean, Padini, I mean, these are homegrown brands, Paksan, Padini, and if you look at some of the other overseas companies which are Asian-based, like Esprit or Potts Design, which is based in Hong Kong, they've all done very well. And
Yeah, I mean, if it could have been like Giordano, that'd be great, but they are still mostly a Padini of Malaysia.
yeah.
Well, I mean, of course, they've done extremely well, but that execution overseas, that would be wonderful.
Yeah, that's right.
So, with Padini producing the shoes here, outsourced, I believe,
Yes.
and then you have Pai and Tong He. So there's a future for manufacturing in Malaysia too, and they do it very well.
Unfortunately, you know, PIE and Tong He, they are paid up is PIE is only 64 million shares. I mean, what we need from the economy point of view, what we need is to be Foxconn to be in Malaysia rather than. But unfortunately, Foxconn is in China.
But in a small way, Pai is the kind of a company in the broader electronics sector that surprisingly can do very well here.
Yeah. Oh, it also has got its cable side, the cable assembly, the cable harnessing. That part has done because demand globally has been strong. So that part has also done very well as well. I mean, their major businesses have done very well. It's not just the contract electronic manufacturing side.
For Paksan, how comfortable are you that the company is now very focused in what it is doing?
Oh, I guess
Since they tend to be a very diversified group.
I guess if you look at the entire group, I think they realized that a lot of the strategies that they had in the past were not yielding the results that they desired, and it looks as if they have learned their lessons. And I can't imagine Paksan Retail in Hong Kong. I can't imagine Paksan in Malaysia changing their names and going into, I don't know, construction or computer casing assembly or things like that. They realize that these businesses need a certain market recognition of their brands, and you could, I mean, he theoretically he could go into another business. The massacre will be very cruel from the market. So I don't think that's going to happen. And in the case of Paksan Malaysia, I mean the Paksan Holdings Berhad, not only have they stayed focused within retail, they continue to expand. Paksan Malaysia is still expanding, and Paksan Vietnam is still expanding, and Paksan China is still expanding. So the capex, the capital expenditure for China is huge.
Okay, there's a retail story with a 10-year growth horizon.
Well, who knows?